Hello, welcome to another episode of Test, Optimize, and Scale. Very excited to have Eric Cox here, Head of Growth for Netcapital, a wealth of information in the equity crowdfunding space, and has really had a part in so many different divisions at Netcapital and the overall success of their campaigns. So excited to get into those stories here today. Eric, thanks for joining.
Thanks so much for having me, Jason.
And Eric, I've known you for a few years now, have been able to stay up to date on everything you're doing and catch up on your background on that as well. Always like to start there. Could we familiarize the audience with a bit of your story?
Oh, it'll be my pleasure. So thanks everybody for listening in. I'm Eric Cox. I'm a member of the Netcapital team, now running Head of Growth here. Before joining Netcapital, a little bit about me, born and raised here in the Southland, LA and Orange County. Went to undergrad here at Pepperdine, studied political science, always wanted to continue a career in the legal space. But I really found entrepreneurial spirit through some of the initiatives they had at the university, including their microfinance program that is actually run through their law school and their business school collectively. And once the bug bit me, it was kind of inescapable. My brother and I created some medical software between undergrad and grad school, brought in a management team and exited our position there, and then joined the University of Michigan Law School, where I also focused on entrepreneurship and venture capital work. So I was an advanced student attorney there, providing free legal services to the community in Detroit and the surrounding areas. And I was able to do some really cool work there. We did some of the early incorporation and trademarking work for Morning Brew, which was acquired by Business Insider. So I love that team over there, really proud of what they've been able to do. Went from low tens of thousands to millions of users through their unique voice. And I was also had the pleasure of working with 3 venture funds while at Michigan, one student-led, one regional in Invest Detroit, focusing on Detroit and the surrounding areas, and then one national in Mercury Fund. And each of those experiences were different, but collectively, it reminded me how important the capital allocation part of entrepreneurship is and how critical that is in the ecosystem. When I graduated Michigan, I came back to California, practiced corporate law at Cooley in their headquarters in Palo Alto, doing mostly emerging companies, venture capital, as well as M&A and some public capital markets work. Had a really great time on the Apple legal team when they bought Shazam for a reported $400 million. And I was also part of some of the post-IPO cleanup work for Snapchat, now Snap Inc. So loved my time at Cooley, a phenomenal experience. But one of my best friends from law school, Rob Burnett, he went directly from Michigan to Techstars. And when Techstars invested in Netcapital, he joined the Netcapital team. And they were headquartered in Boston, but they knew they wanted to expand their impact on the West Coast. And so it was a natural fit for me to join. My old buddy, we worked at 2 of the 3 venture funds together. We had done venture diligence together and legal diligence. And so I knew we'd have a good time together, and I knew we were working on something special. So I joined the team about 3.5 years ago. Only a handful of us at the time. There's much more now, which I'm grateful for. And I really came in to kind of build up the West Coast offices. Now we are fully remote, hence less of an emphasis on regions. And we do support companies across the U.S. We're not purely coastal. I love seeing middle of the country companies make it on and raise capital successfully. Now at Netcapital, we are a registered funding portal headquartered in Boston. I can go into more details there, but I'm really happy to be here.
Awesome. And talk about some powerful associations there. Starting with school, everything you're doing at Pepperdine, Michigan, various law degrees and training in there. And like you said, you went different directions, but then being able to pick it up from Morning Brew, Apple, you worked on the Shazam acquisition, actually had friends over there during that time, into Snap. You've really lived the whole tech progression over the past 5-10 years.
I've been incredibly fortunate. And one of the things I love about Netcapital is I get to basically wear all of my favorite hats, like pure entrepreneur at its core. It's all about capital allocation and fundraising. So, has a very serious venture capital element. But we're a member of FINRA, regulated by the SEC. There are significant legal implications to everything that we do. So I really feel like this is a perfect space for me to be in, and I'm very grateful.
Absolutely. And I've seen you do that firsthand with some of the issuers, some of the founders that are raising capital on Netcapital. What is the process over there? If the founder gets in touch with Netcapital and they say, hey, I want to do a Reg CF campaign, regulation crowdfunding, do they get in touch with you that day? And, overall, what are the steps that take place?
Yeah, great question. So, I like to start off saying the industry has grown a ton and is growing very quickly. We do communicate with entrepreneurs on a daily basis, dozens, hundreds, thousands. So just because uh, maybe an offering is not right now, on the Netcapital platform, that doesn't mean that it won't be in the future, and it doesn't mean that you're not running a really exciting, growing company. I'd like to say that because less than 1% of the companies we communicate with ultimately are accepted onto the platform and listed to raise capital. But that being said, the onboarding process is stringent. We need to make sure that our core function is investor protections. So we need to make sure that our investors on that side of the marketplace are protected and understand exactly what the investment opportunity is. To that end, we have an incredible business development team that can talk to any potential issuer that might want to raise capital through the Netcapital platform. And I'm going to add my contact info at the end here, but you could always reach out to me on LinkedIn or through email. I'm Eric Cox. You have to basically look Eric A. Cox II because my name is so generic. So if you want to find me, I have terrible SEO. But please do reach out. I'm happy to talk to you, and I can get you in front of the right people.
I think you mentioned to me before that there's many Eric Cox results that show up on LinkedIn, so it's actually nice for SEO to have those other pieces there for you. And are there stats on Netcapital? I know you guys are one of the top FINRA regulated equity crowdfunding portals and are a thought leader in terms of how to compliantly launch these campaigns, what to do in terms of setting up the foundation for success. Are there reported numbers on how many campaigns you guys have worked on, or anything like that? Different types of industries that you focus on to categorize other? Yeah.
I'm sorry. Absolutely.
Yeah.
So we're top five in most quantifiable
Yeah.
metrics in terms of number of issuers who have raised capital, amount of capital raised per year, percentages of capital of issuers that raise capital successfully. Pretty much across the board, we're one of the major players in the space. I think the entire ecosystem has benefited from the recent boom, and we certainly have as well. We are industry agnostic. I think if you visit the platform, go to www.netcapital.com, you will see largely we skew high tech, high growth. We also tend to work with earlier fundraisers, like most of the industry, somewhere companies are raising that first $1 to $5 million, or maybe just shy of $1 million, and they're relatively early. So valuations between 5, 10, $15 million valuations. That's probably the most common thing you'll see. We have worked with lifestyle businesses though, liquor brands and things like that, tea companies. So we're comfortable working with non-technical issuers, but I think the majority, how we would describe it, is high tech, high growth, and early stage. And we work with later stage as well. Multiple hundreds of $millions companies raising early millions is not out of our wheelhouse. But there are some industries that we survey our investors often, and there are some industries that they're particularly interested in, and they are the similar industries that venture capitalists and other capital providers are interested in. So we see a lot of demand for artificial intelligence. We see a really cool, strong green tech component, be that material sciences or like lithium or any of the things that help environmental impact. I think there's a solid demand for that. And then kind of across the board, just technologies that are new and exciting that folks believe will be the future. A lot of the folks on our platform are looking for moonshots, hoping that a lot of space stuff, space exploration and things like that. So we are dynamic, and we're happy to talk to any company in the industry, but oftentimes it fits into one of those categories.
High tech, high growth, early stage in many cases, as you're mentioning, 5, 10, $15 million valuations, but you also are able to service lifestyle and have, of course, a very strong portfolio there. I love how you mentioned space, green tech, AI, and just the fact that you're pulling the investors and looking to get that info regularly. That closed loop system really produces the best results.
Thanks for that, Jason. Yeah, we think that as well. I think there's a really exciting growing industry in gaming and like NFTs and crypto. We are unique as a platform in that we streamline the process of raising capital by allowing anyone to invest in private companies online, right? So you do not have to. I don't want you shutting off your brain when you hear investor. You too can be an investor, oftentimes for as little as $100 in these early stage companies. So it really is for folks like you. And we bundle all of these investors, whether you raise from 1 or 100 or 1,000, into one line on your cap table to support follow-on financing. That's a really important piece of the way that we've structured Netcapital. And there are a couple other technological developments I'll get into later, but I want to make sure that when we talk about investors, you didn't have to go to Harvard Business School for this. We try to collect the information that you need to know and present it in a digestible way, so you too can be an investor.
Democratizing the access to capital and early stage deals. And I like how you talked about indirectly March 15th, 2021, where the expansion occurred. Of course, Reg CF went from 1.07 million to 5 million, Reg A Plus from 50 to 75 million. Can you talk about the before, during, after of that event?
Absolutely. I mean, I still remember when they voted on it. It wasn't unanimous, by the way. Despite the fact that I think everybody wants to support the entrepreneurial ecosystem, people disagreed on how to do that. But I remember when the vote was announced, I remember waiting for them to actually formalize. It was supposed to be earlier in the year, but March 15th, when that date came around, I think up to that point, certain groups were excited about this, largely entrepreneurs who believed in allowing their users to come in and own a piece of their company, their customers coming in and owning a piece of their customers. I think anybody who wanted to build a community around their product or brand could see the vision of how allowing everyday folks to come in at a reasonable access point made sense. But there's always, a handful of folks, especially legacy institutional capital providers, who viewed us maybe as an existential threat, maybe as not the most sophisticated investor group. And I think so there was a little bit of a connotation towards equity crowdfunding and Reg CF. And even that, I think, I love our, thank goodness for our regulators, very fortunate to be here. But I think even calling it equity crowdfunding is a little bit of a disservice because nobody thinks of going public as a crowdfund. I mean, I bought Apple shares in 2013 when I was a kid, and nobody was concerned about that. I mean, I had no insight into Apple becoming where we're going to be now. So I think it's, so there's certain things that the industry, I think, could have done better to make this more digestible, approachable. But before March 15th, I think it was a little bit uncertain. March 15th, the difference between being able to raise $1 million and $5 million is significant. Tens of $1 million value companies can use $5 million. Hundreds of $1 million value companies can use $5 million. I think what really shifted was our ability to allow these larger, more established, more sophisticated companies to raise capital. And at the end of the day, if Reg CF is really concerned about investor protections, then making sure that we can get really solid, established companies on the platform alongside early growing companies, that's incredibly important for a portfolio approach, which everybody should be taking. The idea that you're going to be fortunate enough to pick the exact one company that's going to perform well is unlikely. Diversifying your portfolio, only investing in what you're comfortable potentially losing, that is the name of the game. So being able to put a $5 million valued company next to a $305 million platform valuation company, I think was really significant. And then the other thing that happened was once we saw that shift to be able to raise capital more, on Netcapital's platform, our investors, they buy common stock, founder-friendly common stock, always. No convertible notes, no debt, no revenue rights, nothing complicated that you have to figure out what security type am I getting. It's common stock. And I think what is interesting is, our investors don't take board seats, no control terms, no pro rata rights, no liquidation preferences. So when real companies were getting sought after from these VCs, and the terms are a board seat and liquidation, like 2x lick prep, and it's convertible. It's like preferred converting. Those terms were a little arduous for investors, and so it was really exciting to see powerful companies that VCs wanted come and get capital in a way that was more favorable for them, and we're continuing to see that trend now.
And you break it down from all perspectives there. I think you were touching on the issuers that are issuing stock, what it means for them, the investors. I like how you broke down all of the stock classes and different types of mechanisms more common from M&A conversations, mergers and acquisitions. I could definitely see the background as you're stating it there. We've definitely seen it to be a game changer as well. I mean, $1.07 million. Sure, $10 million companies, but to be able to reach $20 million, you had mentioned companies that have 9-figure valuations. We're working with some of those on Reg CF campaigns. It definitely opens all of that up, and I've heard it pointed at Reg A Plus conversations of if you did $75 million a year, that is meaningful capital. It can be applied to many different avenues. So I think pointing that out is a very big deal. I've also seen that coupled with the surge in retail investors that has occurred since, we'll call it March 2020. And, of course, seen it around Robinhood and around cryptocurrency and other types of alternative investments. I like how you mentioned you bought Apple shares, at a young age. That is now available for early stage opportunities for those same individuals who are trading on their mobile apps daily. Can you speak more to that? Have you seen that impact your investor audience growth over at Netcapital?
Absolutely. I've been kind of singing from the mountaintops that ownership is critically important, and ownership early when you actually can afford to take, arguably you can afford to take more risk when you have less responsibility. And so you should only invest what you're comfortable potentially absolutely losing. This is a highly risky asset class and early stage capital. So I want to make sure that's abundantly clear. But it's a different risk profile when you're mid to late 40s, maybe, and have a mortgage and children, than if you're retired on fixed income, than if you're a college kid who has $100 to throw at a dartboard and hope for the best. There's just different risk profiles, and so I'm so grateful that it's no longer the case that only, let's say, 3 to 7% of the United States, the wealthiest of us, were able to get into early stage investments. And even those folks, minimum investments were mid 5 figures to low 6 figures to get in. And I think even that model needed some massaging. And that makes it harder to diversify your portfolio, which every financial advisor agrees is an important metric. There's one more thing that I loved about the transition on March 15th from 1 million to 5 million is that I think a lot of companies would have loved to have had the potential to get to $5 million, but often raising $5 million takes some more time than raising $1 million. And so we rolled out some technology at Netcapital that we call a rolling close. So entrepreneurs can actually access the capital as it comes in. And the website reflects the total amount raised, not just what's in escrow. Mm. And so you really get to kind of have your cake and eat it too, where the website reflects 2 million raised. You get to continue to raise that 2 to 5 million, and you can use that money to start hiring team and growing and marketing. And I think that's really important. Before, if you were capped at $1 million, you might get through to that million before we even really got to have a conversation about, who do we get in? How do we engage the audience? How do we access the capital and start putting it to work? So that it really was a big shift in what it allows our issuers to prioritize and think about how they allocate that capital as it comes in.
Sure. It's instrumental for the marketing budgeting, of course, as well. Eric, of course, know that this. It's probably a lot of the discussions that led to the rolling close towards those disbursements as well, too, where we'll ask groups for a starting marketing budget to then be scaled later with capital, through that rolling close, which is a much more comfortable conversation for everybody. If we're looking at analytics and saying, hey, every $100 we spend, we're getting a new investor, $1,000 average, we're seeing a 10x return, which is a goal metric in the industry. Social sharing, things like that can make it 20x, 50x, dare I say, but 10x is more of an average. We've seen groups that were plateaued when we started working with them and very happy at 5x. So instead of having all of that prepared for a $5 million round and having to spend 500K on marketing or prepared for it up front, there's groups that'll start 50K, 100K. Then as it's working, maybe at the end of the day, it averages out to those higher levels, but they're able to calculate the returns. It all makes sense. So, it speaks to the larger goal that they're trying to raise capital. How much have they already allocated or already prepared for marketing can be a difficult discussion point.
Absolutely.
And what are you seeing for 2022 here? Any differences than 2021, even second half conversations? Are founders looking at everything that's been produced that we've discussed thus far of March 15th, retail investors 2020? Is that showing up more in the conversations? Are they more intentional about what they're going to do during the launch and early stages to create that groundswell of investors?
I do think so. I think people are being really thoughtful and analytical and structured in how they, every issuer that we work with, we dedicate time on what we call a fundraising strategy. So it's very personalized, no one size fits all. We really want to think about how are we going to get to the first, investment metric, the next one, and the next one, all the way up to selling out the round. And so being able to being able to really see past examples and really build use cases around those, and then leverage that understanding to continue to iterate and make improvement, right? I know test, optimize, scale. Um,
Yep.
that's been critical, and it's just so helpful to have more data, more metrics to point to, more experiences and varying experiences. I think 2022, and I'm so excited about it because I'm not sure if you noticed, I'm a little bit extroverted. I love people. I love meeting with folks. I love hearing their stories. My favorite part of this job is learning about industries that I don't think I'd otherwise have time to learn about.
Yeah.
Getting to take a deep dive on NFTs, getting to take a deep dive on the Microsoft acquisition of Activision Blizzard and how that might affect gaming industry. And I just love that opportunity because that helps me think about which companies we want to get on the platform for our investors to get into. So I'm super grateful for that. But I'm so excited and I'm praying that if we can continue to get back to some normalcy, new normal, a better normal, hopefully, we can get back to the personalized element of raising capital. I don't know if the old school flying out the Sand Hill Road every weekend, I'm not sure if that model will continue to persist, but I do look forward to, we had a conference in Austin at the end of December, and CES was phenomenal in Vegas, and South by Southwest looks like it's going to be back on this year. So that's what I'm thinking this year is going to be an additional element of that in-person institutional kind of meet and greet, which I think at the end of the day, people are investing in the people behind the company. People are betting on the team, and being able to have that in-person interface with the team members. I just think that helps support the online capital market still. We want to streamline. We want to take tech forward. We want to make it easier. But at the end of the day, there is a personal element to this whole thing. And when people are partying with especially larger sums, 6, 7, 8-figure investments, you do want to kind of meet the team.
Absolutely. And we're seeing those side by side Reg Ds and accredited investors participating at higher levels. We definitely see in person, and we hope the conferences pick back up as well too. We've had some very productive ones, kind of hybrid where there's a digital element to it. I'm a old school type of guy. I call people directly. I like the in person handshake and the dinner, the after party. I think a lot of my friends and different referral partners groups we've worked with over the years, it's been that we've had the opportunity to be in person, which is rare these days. So I hope so as well. And we are always committed to doing whatever we can to see more success industry wide. Higher success rates, higher average raise amounts. I think that is what stands out a lot to me. I think that's what stands out a lot to me about what you guys do at Netcapital is you go that extra mile. It is more of that white glove service. It is more of a custom, hey, let's personalize a plan for you guys, your prospective audiences, whether it's users, future customers, future clients. Let's go after them and get user owners on board for your raise. I think across the entire ecosystem, everyone has strengths that definitely stands out to me about Net Capital, and I've heard it directly from founders' mouths. So it's present in what you guys do.
I do appreciate that feedback. It's less scalable, but we think it's important, and we use tech as much as we can to make it more efficient. But at the end of the day, I think if we lose track of the human element, if we lose track of these kind of the blocking and tackling of raising capital, which is always hard work, we just make it a little bit easier. Um, I think that could be detrimental to the overall fundraise. And I love hearing these success stories after companies work with us too. We're building relationships and partnerships for the next 10 and 20 and $50 million with institutional players and investment banks across the United States and right here in Los Angeles as well. So, we're not just thinking about how do we get you that first five, that first 1 million, that first 5 million. We really know that the companies often need more capital from there. And so we're already working with partners to help as we're raising capital, onboard you to an investment bank so you can get to that next level as well, all in the service of the entrepreneurial ecosystem. And of course, if our investor base invests in the deal and they know that an investment bank is already working behind the scenes to help get them the next capital at a higher valuation, of course, the investors win as well. So yeah, we're really excited about partnerships and what we're building. Very excited about getting back to in person. We still have to hit the links. We haven't golfed yet,
That's right.
so I'm looking forward to getting back to that too.
Absolutely, absolutely, and we look at everything long term. So excited to share. I was on a conversation with an issuer who's going to do their fifth round with us. I've had a successful Reg D, Reg A plus, two at the time full Reg CFs, and
That's awesome.
that's what we look for is how can we work with groups long term. It gets beyond us, as you were mentioning, some of the different directions it could go from there. But in terms of marketing, the equity crowdfund campaigns, the long-term partnerships, where we seek out and want to have good relationships across the entire vertical. I think we have that in common. And watching all these issuers come through your platform, wanted to ask you for some different recommendations. And to the nature of the show, test, optimize, scale. We look at everything upon first activation as a test. It's the scientific method to some degree. What do you recommend to founders for them to try out for their own model? Whether this is their approach to a net capital campaign, marketing channels to test for their equity crowdfund, or just towards their overall growth. You can even apply the question towards entrepreneurship as a whole. But what are your insights towards these are things you should test?
So I love that question. And one thing I should mention before we get into the test part is one of the things I love when our issuers work with your team at DNA is the way that you guys think about creating content and narrative in a clear and concise way. And then iterating, right? Trying this, A/B testing, developing and assessing and reassessing, and then deploying again. And I think our issuers have said that they appreciate that type of expertise that you guys bring. So it is reciprocal. Um,
Thank you.
Getting back to your question about the testing part, what could founders look to implement towards the success of their fundraise? I think going into it, understanding, well, the first part is understand that this is still going to be hard work. Yes, now we can accept debit card, credit card, ACH, and wire. Yes, now investors can invest from the comfort of their home and on a tablet or on their phones. That does make it easier, but fundraising is hard work. And I think going into this knowing this isn't a kind of thing you have on the background while you try to do something else. This oftentimes is this should be a laser focus on fundraising through the platform is my goal right now. I'm going to hit certain metrics each month, each week, and help kind of drive towards those goals. So I think really having a frame of mind going into it that you're going to have to earn it. We are happy to meet you there every step of the way and support it, but we couldn't possibly as a platform promote your deal the way that you could as a founder. Also, we have to be company agnostic, right? We treat all of our issuers the same, so we can't prioritize one deal over another. When it comes to testing, though, I think what is helpful is as we're ramping up, part of our let me give away some inside information here. Part of our fundraising strategy is actually thinking about who is in your ecosystem already. That is almost always going to be an easier sell than somebody who has never heard of you or your company. And I think people lose track of tons of different groups. People lose track of their friends and family. people lose track of their community groups, people lose track of their alumni associations. These tend to be people that are more likely to convert than a person who first time sees an ad. Now, marketing and advertising is it can always be an exciting part of your strategy, but I just like at the very beginning, we like to sit down and think about who is already in your community, what crowd do you already have, and to that end, I do encourage folks to, wherever they are in the life cycle of their business, be building their community. It doesn't hurt almost ever. Keep those numbers, keep those emails, keep their titles, keep up with folks. Sometimes I used to be really good about keeping people up to date on what I'm doing. I've gotten worse at that, but you can, get a little 1 month or 1 quarter update, just you as a person, same way a company would. And people do like that, and keep track of folks. And then they're more likely to convert when they have heard from you once a quarter than when they last time they spoke to you was 5 years ago at your high school reunion. So, just I guess it kind of ties back to just being a little bit more relationally focused, and is not really entirely self-serving. Of course, it can benefit you. It benefits them as well if you really believe in your company and the opportunity. It breaks my little heart when I see people trying to get into the deal late. People that might have even known the founder or the team are like, oh, I was in the dorm room across the way when they started creating this, but I missed it, sold out before I got in. And it's just like, that's unfortunate. I think everybody lost there. So
Yeah. Yeah. Those are great things to point out. I mean, I want to share those notes directly with my team. I'm going to play a clip of this podcast to different Netcapital issuers. I think it's a step that's often overlooked. It is crowdfunding at the end of the day. I am actually curious on some of your other titles for equity crowdfunding, but we'll get back to that. As a whole, a crowd creates a larger crowd. Momentum is investable. You want that line around the block. So if you get to a page and it has only a few $1,000s raised, or if you get to a page, same offering, and there's a few $100,000 raised, it says two different things. And from a volume, not just one investor coming in and putting in one large check. I'd rather see 100 investors putting in an average of $1,000 each than one investor putting in 120. It really speaks volumes. You don't want the empty restaurant sensation of, hey, this looks good, but no one else is here. I don't know what's going on. Is there something I don't understand about the deal? Is something off that I'm not seeing? But if you're able to put a list together of a couple hundred people that you've met in your life, and going back to those chapters that you were saying there, the dorm room, who was in the dorm room across the way? Have you reached out to him? The alumni chapter, I've seen that really come to play, and the most active founders having the most productive first month of their campaign as a result. Then when traffic is driven, whether it's from existing Netcapital investors or from advertising campaigns, from individuals perhaps who've participated on other alternative investments online, other public-private markets, whatever it may be, they see all this traction, say, hey, something's going on here. I should check that out. I should see what's going on and participate themselves. So I like how you guys emphasize that. Again, it's overlooked commonly by issuers.
it really is. It really is, and it doesn't need to be. And
Yeah,
and again, even if you never ultimately launch a crowdfunding campaign, I generally think that little bit of time that it takes to continue to build your community is worthwhile. So, yeah, I would build that in. And I can honestly, it's funny because I could do a better job of it. So I think we can all do a little better job of it.
absolutely.
But at the end of the day, it's helpful to try to keep that at top of mind.
Sure, sure. Year after year, you look at your LinkedIn audience or your email list or your phone, or you run out of favorites on your phone. Wow, I know a lot of people. I haven't talked to some of them in months, years. There's that sensation with the pandemic where you see somebody and realize you haven't seen them in 2 years. Or maybe it's someone you see less and it's even longer back. So I like that. It's a good excuse to get in contact with your networks. As a marketing agency, if we're trying to vet a deal and project what it can do, audience size is one of the first things we look at. And it doesn't have to be huge as much as just engaged quality
Yeah.
audience members. It's a predictor on what can be done. Now, what happens when a campaign goes live? Let's say there's a decent amount of first degree connections that invest in that early stage, maybe 50K, maybe 100K. So it's not at a bad spot, but
Mm-hmm.
initial efforts beyond that are not producing. Maybe the ads aren't working, maybe it's the content, maybe just nothing's being done. What do you do in those scenarios? Everyone wants to broadcast their success stories, but I like looking at solutions. Like looking at problem solving. It's how I measure marketing talent among my team. What do you do when things plateau? How can you optimize to a point of effectiveness?
I love that question. And the first thing is don't freak out. That is, the trajectory is not always linear. People like to talk about exponential growth. If you know anything about exponents, you hardly ever see it in real life. You know,
Yeah.
it just often doesn't work like that, and that's okay. Sure, we're gonna have those offerings that raise $2 million in an hour, and we're like, wow, that's wild. But there's also gonna be offerings that just tick along, tick along, tick along, and then hit that, hit a sweet spot. There are symbolic signals in the market that we've seen 25% raised, 50%, 75% raised, closing soon. Those all drive investment. We've seen there's something symbolic about hitting that first sixth figure, $100,000 raised. There's something just kind of mental that checks that makes people feel like it's less risky. So trying to get to that point is helpful. I think what's also great is the Netcapital platform, and I'm sure other players as well have a waitlist feature where somebody might be following the company, thinking about investing, but just haven't quite engaged or converted yet. Oftentimes there's an opportunity to go to those folks and say, and just very honestly, set up a webinar or something and engage with them and ask, what do you need to know for you to be comfortable coming in? Like, what is it that is missing for you specifically? And again, some of this is a little bit more granular, a little bit more manual. But somebody might be on the bench in your wait list, ready to convert, and all they really need is a question answered, or a couple of questions answered, or just to get to actual have an interface with you. Because again, this is a relational element to fundraising. So I think the opportunity to re-engage wait lists and convert them. There's always an opportunity to get folks to invest again. A lot of folks are living on cycles, whether that be pay period to pay period, month to month, quarter to quarter, bonus season. There might have been someone who came in November into your deal, but December bonus just came out, and you haven't engaged with them in a bit. There's capital just hanging out on the sidelines, ready for you. And I think the other piece to remember is sometimes because charitable crowdfunding came first, which I'm grateful for. I think we all love Kickstarter, Indiegogo, pioneers. Um, but sometimes people adopt a charitable mindset to their fundraise. This isn't Nobody's asking for handouts here. You're providing an opportunity to invest in your company. And if you really do believe in your company the way you should, the way we look for somebody to when we bring them onto our platform, this should be pitched as an opportunity for them to join in a scenario where they generally would not be able to. Again, 93 to 97% of the US public has been excluded. Another part, and this will be my last piece, I'm just giving out the farm here. Maybe you need to expand your scope. Investment is not limited to the United States.
Mm.
There are billions of people that can invest in your fundraise. So we've seen international investment come through. There are so many media outlets across the world. And so maybe you've hyper prioritized, I don't know, the coasts. And maybe that's not the right idea. There's capital right here in the middle of our country. There's capital in the rest of this continent. There's capital in the rest of the world. So sometimes it's helpful to expand the scope of where you're targeting investment.
Expand audiences, maybe channels, change up the messaging as you were mentioning, really take the deal seriously. And I like how you mentioned that your audience isn't looking for handouts, that they want to buy an investment vehicle. And I've seen hesitation of founders, going back to your first point, that they don't want to go after their friends, their family, to have to put money in. Where it's like you said, if you believe in this, when you're exiting, they may be upset that you didn't bring it up to them. I've seen it happen. Yeah.
Absolutely. And actually, that's one of the funny things about a lot of the platforms are now moving towards some type of transferability. We built it out from the very beginning. That's why, actually, one of the main reasons why we bundle every investor into one line on your cap
Yeah.
table was to make that transferability a little bit easier, right? Your cap table never changes. And so, there's a lot of movement towards that transferability and liquidity in private capital markets. And I love that. And one of the reasons why I love that is I want to do away with the awkward conversation at Thanksgiving. I want to do away with that. If you should be comfortable going to your aunt or your cousin, and giving them the opportunity to invest. And then if they do, not feeling concerned that come Thanksgiving, they're going to be like, hey, where's my $1,000? How are things going? And I think liquidity does a lot for that. Being able to say, look, here's the update on where we are. We love having you as an investor. If this is no longer right for you, there is an alternative, and it wouldn't be, no harm, no foul, but you can exit your position. I think that's really important for the industry as a whole. And that, I think that'll allow people to be more comfortable with engaging with groups that they might be sensitive to engage with. So I think it's going to be important developments in the future for that. And we're working really tirelessly. We announced our partnership with an ATS, alternative trading system, that will actually build out software to be able to bring some liquidity to the private markets. We're so proud of that.
Secondary market. I like your
secondary market.
I like your projection, your forecast. Secondary market will remove uncomfortable Thanksgiving conversations. Heard it.
And I'm hoping that it will help move venture capitalists to more favorable terms.
Yes.
The theory, the philosophy for why VCs get these preferences, liquidation preferences, pro rata rights, was because the shares were illiquid. That's what they would always say. Well, I'm locked in. I don't know if you're going to go public in 10 or 20 years, and I don't have control over the process. And since I can't sell my shares, I need you to take a worse deal. And I think we could start to move towards a happier medium in the middle where there is some liquidity, some transferability, and then you don't need all the crazy stuff that you start to see from some, not all. I love venture. I think we can work together. It's an important part of the ecosystem. But some VCs have been, really capitalizing on that opportunity. And I think it also allows us to bring different folks in. We've done some really cool events with like VaynerMedia and spoken to some of their professional athletes. These guys know that they're one injury away from needing that $100,000 back, that $250,000 back. They know. And so bringing some of that transferability, I think, allows us to get different pools of capital into the game as well. The Golden State Warriors are just investors that happen to play basketball anyway. So, am I wrong?
No, I like that perspective across the board. And I look at it as a marketplace. And as you're saying, VC, I think valuations, the deals as a whole, I mean, founders have had to accept that because of what was available to them and selecting the right partner. The negotiation occurred either way because both sides want a good deal. But valuations have been more favorable for founders using equity crowdfunding. I just want a fair marketplace. And I think as more and more deals become available, even the VCs are going to say, hey, if I have liquidity here, or if I'm locked up over there, if these two companies are competing, yeah, I may be able to negotiate for preferred terms over there, but this seems like a safer vehicle long term. At least that's what I'm hoping for. By the way, what was the term that you think should replace equity crowdfunding?
Private capital markets.
Private
We
markets.
are technology companies.
Guessing.
Yep.
Okay.
Yeah, I love private capital markets because we've already been calling. It was the public companies group. It was public capital market. It was capital markets as a whole, but there wasn't really a big private component because that would be venture capital, which is the venture part of our corporate group. But since we're already talking about capital markets as that division of the corporate group, I think there's just call it private capital markets and public capital markets, and both are important.
Mm-hmm. Have it all in there, absolutely. And I've heard public-private markets, private-public markets, trying to explain the nature of the filing. I think just a larger, sleek private capital markets would work well. And as we start wrapping up, wanted to still ask about scale. So we talked about what to test, what to optimize. Do you have any success stories, anything you want to showcase in terms of scale, or any just approaches as a whole towards scale? I know that's what I'm playing for.
No, it's good. I love it. One of the things that I love to see and it scales really well, is leaning all the way into earned media. I mean, you should be thinking about earned media even before any fundraising. But but how you leverage earned media with paid media is particularly scalable. I love seeing some of DNA's ads, for example, that say Forbes article says this, NASDAQ article says this, King's Crowd puts us at a, puts us at a buy. Or I love King's Crowd. They raised with us, but I don't know exactly. I know they 5 stars. I don't think they actually say buy. So I'm sorry. I'll take that back. King's Crowd says, check us out. And I think there's so much social proof around that because you can't pay King's Crowd to give you 5 stars. You can't. There's certain groups that are just wholly independent, and their whole value proposition is that they are independent. And so if you can earn the media, which takes a lot of hard work. I know it's easier said than done. We work closely with Pepperdine Most Fundable Companies. We work. They do a lot of diligence. They vet 4,500 companies a year, and we sponsor their program because Pepperdine doesn't have their own pool of doesn't have a huge pool of capital yet. And so we uplisted one of their companies. They sold out their $1 million round, and one of the things that we leaned hard into was the fact that they were a platinum winner from Pepperdine Most Fundable Companies, top 3 out of 4,500. And you take that earned media, you put it, they didn't actually run ads, but they could have used that to go and tell more people about that success story. And that social proof is impactful. At the end of the day, just like venture capitalists, retail investors are trying to de-risk their investment. And there's only so many ways to make things seem less risky. The reason why people like serial entrepreneurs is because they've done it before. That makes it less risky. The reason why people like massive target markets, because there's more potential users, which makes it less risky. If you view the entire ecosystem about mitigating risk, I think maybe once upon a time back in the 90s, VCs were actually really risk tolerant. I don't think that really exists too much anymore. There's too much data, to be that risk tolerant.
Yeah.
But even in our core, we all navigate our lives minimizing risk as much as we can, and then having social proof, having these marquee, like you said, having traction, that's one of the strongest indicators of social proof. Somebody else has already invested. So that makes me feel less risky about parting with my money there as well. So I think if you think about it in the framework of risk, if you can leverage things that you already have going for you and use those in new creative ways with support of experts like DNA, I think that's a pretty traditional recipe for success.
So many great things to point out there. And glad that you're catching our ads. It's part of our formula to showcase social proof. I think those dynamics as a whole, founders focus on, they're going to be able to put together a strong approach, strong formula towards success. And then, as you said, scale, taking it to the next level. I've seen groups plateau there. So, listeners, I would do every one of those things that Eric just said there. I echo that. As we begin wrapping up, Eric, any final thoughts, anything we didn't get to that you want to make sure to emphasize while we're talking?
I'm sure that there's something I should plug here. Well, let me just do this. It's always a pleasure to be on the line with you, Jason. I do look forward to hanging out more in person in the new year. If anybody listening to this wants to reach out to me, please do. My email is eric, ERIC, .cox, COX, @netcapital.com. That's NETCAPITAL.com. You can go directly to the website, check it out, but feel free to shoot me an email. I'm happy to connect with you on LinkedIn, maybe even meet up in person if you're local. But my favorite part of this job is learning about what really passionate entrepreneurs are building and seeing if we can help that. And whether that's through the platform or some other way, I just love hearing the stories. I love trying to be an advocate and support of the ecosystem. This is kind of everything that I've always loved and done. So please reach out. I'm happy to keep that going. And as you're considering different investments, maybe you're on the investor side. So that was kind of the narrative for potential issuers or potential clients, potential entrepreneurs raising capital. On the investor side, again, take risk thoughtfully, only what you can. But there are opportunities to move certain discretionary spending towards this market. There are a lot of folks, and I don't want to pick on anything specific, especially because I live in California and the California Lotto does drive revenue for the state. But if you're a big lottery ticket purchaser, you might have a higher likelihood of hitting it big through a startup than you do through the lottery system, right? There are ways to get involved in this ecosystem at manageable touch points, and I think you too can be an investor, and you should should check out all the platforms. I obviously I have a bias towards Netcapital, but you can go to kingscrowd.com and you can see a whole bunch of different investment opportunities, real rich data, and that could be, be an informed investor if you're going to be an investor. And I think that's really, it's an exciting time to be in the space.
More
That was
great
a lot.
recommendations. And yeah, we've had King's Crowd on the podcast. Chris, the founder over there, is fantastic. I love your non-biased recommendation. We do the same thing and support all groups in the space, marketing agencies alike, so on and so forth. Definitely like how you add the investor side too. Like you mentioned, high risk, 10% of a portfolio, 20%. I think a lot of that education's missing. And want to really point out, Eric made an invitation there. Get in touch with Eric over LinkedIn. Meet up with him if you're in LA. Again, wealth of knowledge and a blast to speak with, even if it's just a call. And Eric, want to thank you for coming on today. Had a lot of fun in this conversation. I think it's very rich in information, education that listeners could take in. Audience, thanks for tuning in. We'll make sure to see you next time. And again, don't forget to get in touch with Eric.
And if I can add one last thing on the way out, if there's if there's something that you love using, a product or a service or an app that you love, you can also shoot me an email about that. And maybe we can get them to raise capital and then you can come in that way. It doesn't have to be your company necessarily, but one of the things I'm hoping my long-term trajectory of this industry is hopefully eventually people are just unsatisfied using products that they don't own. Why am I going to buy your product if you didn't even let me join in the upside? What is that about? That feels a little selfish, doesn't it? Like, why would I use X brand versus Y brand when Y brand let me join in as part of the family? So if there's something that you love that you'd like to own, that could be another piece of the puzzle, and we're happy to chat with that team as well. So just want to put that out there. But so grateful to be here, Jason. Thanks for having me. Love hanging out with you, brother, and I hope you enjoy the rest of your year.
My pleasure. And you heard that as well. Don't purchase products unless you have ownership in the company. If you don't, send them to Netcapital. Awesome, Eric. Thanks again, everyone. We'll see you next time. Take care.